Hello everyone, and welcome back to Explain the Charts. Today is October 7th, 2025, and we are taking a deep dive into one of the most watched stocks on the planet, Amazon, ticker symbol Amazon. In this video, we'll break down the crucial news and current events driving the narrative around the company. Then, we will meticulously analyze the charts to identify key price levels, trends, and potential trading opportunities. First, let's talk about the news, because there's a fascinating mix of bullish and bearish sentiment right now. On the bullish side, a Morningstar report highlights a significant strategic shift for Amazon, particularly with its cloud division, AWS. A Baird analyst notes the company is moving from defense to offense in artificial intelligence, which could be a massive catalyst for growth. This analyst is an opportunistic buyer and has set a price target of $244, suggesting more than 10% upside from current levels. Adding to this long-term optimism, a Benzinga article poses an interesting question: is Amazon finally a value stock? Despite a massive 700% rally over the last decade, its valuation metrics are now at a 10-year low. The argument is that the market may be underestimating profit engines like AWS reacceleration, AI efficiencies, and the high-margin advertising business. Wall Street sentiment appears strong, with the MarketWatch headline noting analysts have given Amazon a perfect 10 rating, betting on its AI and cloud comeback. Furthermore, the upcoming Prime Big Deal Days are positioned as a strategic move to boost holiday sales, which could provide a near-term positive jolt. However, it's not all clear skies for Amazon. A Bloomberg report warns that the stock's appeal is being hit by intensifying cloud competition from rivals like Microsoft, Google, and even a fast-growing Oracle. This is a critical headwind to consider, as AWS has historically been the company's profit powerhouse. On another cautionary note, Fox Business reported on Amazon's recent billion-dollar settlement with the FTC over Prime subscription dark patterns. While the financial hit is manageable, regulatory scrutiny and negative headlines can certainly weigh on investor sentiment in the short term. Now, let's see how this news landscape translates into the price action on our daily chart. Looking at the bigger picture for 2025, we can see a story of high volatility. The stock put in a 52-week high way back in early February at $242.52. That level stands as the major resistance target for any long-term bull run. Following that peak, the stock experienced a dramatic sell-off, finding a firm bottom in early April around the 52-week low of $161.38. This $161 level is our most critical long-term support. A break below that would signal a major bearish trend change. From that April low, we saw a very strong recovery, rallying all the way up to about $238 in early September. This September high is now our most immediate major resistance area. Since that peak, the price has been in a clear downtrend over the last month, falling to where we are now, consolidating around the $220 level. So, the long-term trend is still arguably up from the April lows, but the intermediate trend is currently bearish. We need to watch this $216 to $220 area very closely. This zone has acted as support multiple times in the past few months, specifically in late September and again yesterday. A decisive break below this zone could open the door for a retest of the August lows around $211. Let's zoom in on that dramatic period back in April, as it tells us a lot about where the big money sees value. Here on the daily chart, from late March through early April, you can see the price fell off a cliff, dropping from over $200 down to that $161 low. Look at the incredible volume on these red candles during the first week of April. This is what we call a capitulation event, where panicked sellers unload their shares. But notice the reversal that followed on April 7th, an enormous green candle on massive volume. This signifies that institutional buyers stepped in with force, believing the stock was significantly undervalued at those prices. That $161.38 low is therefore not just a random number, it's a battleground level that was fiercely defended, making it a powerful support reference for the future. Now let's switch to the 1-hour chart to get a clearer picture of the recent downtrend. Looking at the price action since the early September peak near $238, we can clearly draw a trend line connecting the lower highs. The price has been consistently rejected every time it has tried to rally, confirming this bearish channel. Right now, we are consolidating in a tight range, generally between $216 on the low end and $224 on the high end. This consolidation is a classic sign of indecision in the market. Bulls are defending the support at $216, but bears are preventing any significant move to the upside. A breakout from this range will likely dictate the direction for the next couple of weeks. A break above the downtrend line, roughly around $225 now, would be the first sign that the bulls are regaining control. Conversely, a break below $216 would signal a continuation of the downtrend. For a more granular, short-term view, let's pull up the 15-minute chart for the past few days. Here we can see yesterday's trading action in detail. The price gapped down at the open and sold off hard, hitting a low of $216.03 in the early afternoon. However, buyers stepped in right at that key support level we identified on the larger timeframes. The rest of the day was spent slowly grinding back up, closing near $220.90. This intraday reversal shows that there is demand for the stock at these lower prices. For day traders today, the key levels are yesterday's low at $216.03 as support and the overnight high around $221.73 as initial resistance. A move above $222 could give the bulls some short-term momentum. A failure to hold $218 could see us retest that crucial $216 support level again. So, let's bring everything together and recap the key takeaways. Fundamentally, you have a long-term bullish narrative centered on the AI pivot and a potential value opportunity, weighed down by short-term concerns over competition and regulation. Technically, the stock is at a critical inflection point. Let's recap the important price levels to watch. Major long-term support is at the 52-week low of $161.38. The most immediate and critical support zone is between $216 and $220. On the upside, we have initial resistance around $225, which also coincides with the recent downtrend line. Above that, the September high of $238 is the next major hurdle, with the ultimate target being the 52-week high at $242.52. Now for some unbiased predictions. I believe there is a 60% probability for a bullish scenario where Amazon holds the $216 support. Positive news from the Prime Big Deal days could act as the catalyst to break the downtrend line around $225. Confirmation of this would be a strong daily close above that level, which would open the path for a retest of the $230s. On the other hand, there is a 40% probability of a bearish scenario. In this case, broader market weakness or a negative catalyst could cause the $216 support to fail. A daily close below this level would likely trigger a quick move down to the next support at the August low of $211. The key thing to watch for in the coming days is whether buyers can continue to defend the $216 level with conviction. Pay close attention to volume on any move up or down, as it will signal the strength of the breakout. Thank you for joining me on Explain the Charts for this analysis of Amazon. Please remember, this content is for informational purposes only and is not financial advice. Always conduct your own research and make investment decisions based on your own due diligence.